In this analysis, we're turning our focus to Nanda Optoelectronics, a company that finds itself at the very epicenter of the global semiconductor industry. So what is the core thesis for Nanda Optoelectronics? Well, it's a company positioned right at the center of a national strategic push for semiconductor independence. But, and this is the critical point, its valuation today isn't just reflecting future potential. It seems to have already priced in a massive technological success story. And that, of course, sets an incredibly high bar for execution. So here's our roadmap for this analysis. First, we'll look at the core logic, what's driving the opportunity and the pricing. Then we'll get into a business analysis of its three main pillars. From there, we'll shift to the financial perspective, looking at the quality of its growth. Then we'll isolate the key variable, the photoresist breakthrough. And finally, we'll wrap up with the risks and a forward-looking outlook. All right, let's dive into our first section, the core logic. We really need to understand the market forces that have been driving the company's recent performance. Okay, so take a look at this. Over a recent 40-day window, Nanda Opto's stock jumped 14.1%. Now, to really put that in context, the broader market, the CSI 300, was only up about 2.1%. In that same period, we're not talking about a small beat here. This is a massive divergence. And a gap that wide tells you the market is betting on something very, very specific and very significant for this one company. So what's behind this move? Well, it really boils down to two factors. You've got your beta, which is the tailwind from the entire semiconductor market being strong. A rising tide lifts all boats. But that doesn't explain the huge outperformance. The real driver here is the alpha. That's the market's powerful belief in a very specific company-level event, a major technological breakthrough that could be a complete game changer. Okay, so we've established the market expectation. But what's the actual business that these expectations are built on? Let's deconstruct the company's foundational revenue streams. Nanda's business is really built on three solid pillars. And this chart gives us a really clear picture. If you look at the revenue breakdown for the first half of 2025, one segment is clearly the heavyweight, electronic gases, which brings in over 60% of the revenue. Now, the other two segments, advanced precursors and photoresists, they're smaller. But as we're about to see, they play an absolutely crucial strategic role. So it helps to think about the role each of these pillars plays. First, you have electronic gases. This is the stable, foundational cash cow of the business, generating the cash flow. Then you've got advanced precursors, which is a high-tech segment where the company already has a very strong technical edge. But the real focus for the market, the segment that carries all the narrative weight, is photoresists. This is the high-risk but incredibly high-reward part of the story. All right, so we have the business structure down. But the next logical question is, what about the quality of the growth? Is it profitable? To figure that out, we have to look beyond the revenue and dig into the drivers of profitability. And this number right here is really the key takeaway from the latest financials, a net margin of 17% in the first half of 2025. Now, why does that matter so much? Well, compare that to the full year 2024, when the margin was just 11.5%. This isn't a small step up, it's a huge leap, and it points directly to a significant improvement in the underlying profitability of the business. Now, this table is where things get really interesting. If you just glance at the ROE, the return on equity, you might actually think things are going backwards, since it dips a bit in the latest period. But this is exactly why we use a DuPont analysis. It breaks it down for us. You see, that dip in ROE is driven almost entirely by a drop in financial leverage, the equity multiplier. But look at the two components that measure core operational strength. Net margin, which we just talked about, is way up, and asset turnover, which measures efficiency, is holding strong. So what this tells us is that the core business is actually getting healthier, more profitable, and more efficient. That's the real story the numbers are telling. And there's one more piece of context here that's really important. It turns out that an accounting change back in 2024 actually hid some of the operational improvements that were happening. It sort of artificially depressed the numbers. So that big jump in margin we see in 2025, it's not just a one-off event, it's really the culmination of a positive trend that was already building beneath the surface. Okay, so the foundational business is solid and the financials are clearly improving. But that alone doesn't justify the market's immense expectations. This brings us to the key variable, the crown jewel that is really commanding all the attention, the ArF photoresist breakthrough. So what is RF photoresist? In simple terms, think of it as the ultra-high-tech, light-sensitive film used to create microchips.
It's used in the most critical step of the manufacturing process, called lithography. Basically, the quality of this material determines just how fine and complex the circuits on a chip can be. It is absolutely crucial for making the advanced semiconductors that everything runs on today.
And this quote really gets to the heart of why this is such a big deal. RF photoresist is what we call a choke point material. The global market is completely dominated by just a few companies in Japan and the United States. They control over 70% of it. So for China, developing a domestic source for this isn't just about one company's success. It's a matter of national strategic importance for the entire semiconductor supply chain. But here's where the story takes a turn. Right in the middle of all this optimism, we see a signal that, on the surface, seems counterintuitive. In fact, it's a classic warning sign. Top executives started selling their own shares in the company. So this raises a really key question for our analysis. We know that executive selling is usually seen as a negative signal. So why did the market seem to just absorb these sales with almost no negative impact on the stock price? Well, the explanation really reveals a much bigger force at play. First, there was simply immense buying pressure from institutional investors that soaked up all the shares being sold. But more importantly, it shows a powerful conviction in the company's long-term strategic mission. It seems the market decided that the national priority of semiconductor self-sufficiency simply outweighed any concerns about these short-term executive sales. Okay, let's bring all these threads together. We've looked at the business, the financials, and the big photoresist story. Now, for a final section, let's balance the bull and bear cases and identify what we need to watch going forward. And it all really comes down to this core analytical tension. The bull case is pretty clear. This is a company of huge strategic national importance. It has a potential first-mover advantage in a critical material, and it's backed by a solid existing business. But the bear case is just as compelling. The valuation seems to have priced in perfection already. There's enormous risk in actually executing and mass-producing this new technology. And of course, those executive stock sales still raise questions. It's a real tug-of-war between two very different narratives. So, given that tension, what are the key signposts we should be watching to see how this story actually unfolds? Well, you can think about it in stages. In the near term, say the next 6 months, the key is the announcement of the very first commercial purchase orders from major chip makers. Looking out a bit further, 1 to 2 years, the real test will be seeing this photoresist successfully used in more advanced manufacturing nodes. And then long term, over 3 to 5 years, the ultimate measure of success will be securing a stable, significant domestic market share. Which brings us back to the single biggest question hanging over this entire story. There is no doubt about the company's immense strategic value. But can that strategic value be converted into real, sustained market and technological leadership? That remains the core challenge for Nanda Optoelectronics, and it's what will ultimately determine the outcome.